All right, so you want to get a high credit score. What are the things you have to focus on? Well, all credit scores that I'm aware of basically have the same base components. There's a ton of different scores out there, but for a FICO score, which is one of the more common uh, credit scoring models that's used, um, these are the main factors. So fact number one is paying your bills on time. Um, Even one late payment, 30 days or more, will have a substantial impact on your score. And you really want to avoid that. So my recommendation is to always pay every single bill on time. Don't ever get a late payment. If you do have a late payment, um, you can go on creditkarma.com, register a free account, and you can see if you have any late payments. If you have, let's say you have one missed payment, well, what you'd want to do is send a letter to the creditor that posted the late payment on your account and see if they could remove that late payment as a goodwill gesture. And a lot of times that is possible. So pay all your bills on time. Don't miss any payments because for the highest score, you want to have your payment on time payments to be like over 98%, maybe even higher. But you really want it to be 100%. So what else? Uh, Credit variety or credit mix is a important factor. So what this means is basically having different types of accounts. So like you could have, so you had a student loan account, that'd be one type. Um, Credit cards, credit card account would be another type. Car loan would be a different type. Mortgage would be another type. Personal loan would be another type. The more variety you have, the better you're going to do in that category. Utilization, credit utilization is another component. So basically, the way you break down this is credit utilization means the ratio of your available uh, revolving credit to used credit, or rather the ratio of your used credit to available credit is how you determine your utilization ratio. And for the highest score in this category, you want it to be over, you want it to be under 9%. So basically how you calculate this is, let's say you had, for example, $1,000 of credit line on one credit card. So that would mean your total available credit would be $1,000. And let's say you were using, um, let's say we're using $100 of that. And then your total credit utilization would be $100 divided by 1,000 times 100, and then you get, in percent, that would be 10%. And you wouldn't be maximizing your score for this category. So in order to get a score over 800, you absolutely have to have it under 9%. And I've even seen some people saying that you need it to be under like 5% or even lower. So, but I would say if you have it under 9%, that's pretty good. That's, having it over 30% is going to seriously detrimentally affect your score. And this category, this factor is very easy to fix. All you have to do is just, if you have outstanding balances on your credit cards, you just pay them down so that your total utilization is under 9%. That's very easy to fix. With the on-time payments, if you have missing payments and or late payments and your creditor is not willing to remove them from your account, you might have to wait 7 years for them to fall off. And the only way to bring up your on-time payments percentage is to get a bunch of new on-time payments for possibly new accounts or existing accounts. So that's just something you could fix over time. Uh, the utilization could be fixed within one billing cycle. And another point about utilization, uh, when I say under 9%, I don't recommend carrying a balance ever with a credit card. So what this means is you have your statement date, and then you have your billing date for your card. Statement date is when your card, your bank actually reports to the credit bureaus how much of the credit you've used. So let's say in that previous example you had $100 at your statement date, and then you paid that off immediately in full. You wouldn't carry a balance past your billing date. So don't pay the minimum balance. Pay off the entire thing immediately, and you want to keep it. You ideally like to keep your cards all at zero by the time that your billing date comes. So, what other factors are important to have a high credit score? Well, the age of account is very important. This one is another the only way you can really get a high max out in this category is just by time. So let's say you're young, you really want to get a few cards, as many cards as possible when you're young, and just have these cards mature. And by the time you're middle age, you're going to have you're going to be doing well in the age of account category. And if you add a new account, it's not really going to affect you too detrimentally. So the way you determine your age of account score is basically your average age of account. So you just take all of your accounts and add up all the ages of each account, and then you divide it by the total number of accounts, and then you get your age of account. So the only way you can really max out this category is either by closing. Let's say you had like a 10-year-old account, and then you had two accounts you just opened this year. Well, then your average age of account would be 3.3 years. So if you closed out one of those accounts, now your average age of account is going to be, if you close out one of the low accounts, now your average age of account is going to be 5 years. But let's say you open them all at the same time 10 years ago. Now your average age of account is 10 years. And let's say you'd add another account. It's not really going to affect it as much, So your average age of account would be 30 divided by 4, 7.5 years. Yeah. It's which would be a good average age of account. And the only way that you can really increase that that part of the score is just by having old accounts. So I don't recommend closing old accounts unless they have annual fees. If they have annual fees, you're going to have to make that determination whether or not the fees worth it to you with the benefits that you get from that card are worth it to. Another factor is your total available credit. So when you're first starting off in credit, you're gonna most likely get low limits unless you have somebody that added you as an authorized user on an existing card. In that case, you might be able to get high limit cards right off the bat because your score would be pretty high. Because when you are added as an authorized user on someone's account, you adopt the entire credit history of that account for the time that you are an authorized user on that account. So the only way you can get high limits is basically by having a high score, already having existing high limit cards, and then getting your limits increased, gradually over time. So you're going to have old accounts to get the high limits. So those are the main factors that determine your credit score. And yeah, I thought I'd share that with you guys. And I appreciate you checking out my channel, and I'll be adding more videos as frequently as I can. And I appreciate you guys checking out this account.